Okay, now we'll see what is the account table theory, and we'll see how it works into the Oracle here. Accounts payable is a normal accounting payable. You timely record the invoices. If you record invoice, there appears supplier liability. Effective payments to supplier, invoice validation and approval exist fold pay. It is a subsidiary to it. It is integrated to other module, GL, everything. Yeah, GL is the core module. I'll explain you how purchasing in an Excel sheet. Okay. Hope you can see the Excel, right? Okay. Payables. I am creating an invoice. When I create an invoice in the system, it can come through imported invoice or manual invoice. What is imported invoice? Imported invoice, it is imported from other module, PO module, purchasing module. Purchasing. When you implement purchasing module, if you're a manufacturing company, imported from purchasing module as a PO, automatic or report. So it is automatic invoice created. They call ERC. Okay. Manual. If you want to create directly in AP module, then you would create a manual invoice AP module. Okay. Let's see. What is the accounting entry while creating an invoice? It is like our personal book. What is the expense for an AP expense entry? Debit expense, credit expense accrual. We call AP. So debit expense. This is the invoice entry. Okay. 1,000. Okay. What happens now? I am going to pay. Next step, payment. So expense is already accounted in the P&L. While paying supplier liability or AP accrual, you can say supplier liability also. To bank.
Suresh, I guess in between your voice was breaking. DR and CR means we lost that
debit
voice.
Debit credit account.
Acha.
Basic accounting, you know, right?
Right.
It's a debit credit. Now, okay. So how the system is generating, I am telling you. Okay. Right.
Okay.
So you are creating AP invoice. It may be expense or it may be an asset, whatever it is. Because when you buy a fixed asset or whatever it is, okay, and you are paying it. It is a payment to bank. So there are 5 modules. I already told. GL, AP, AR, fixed asset, cash management. 5 modules in the Oracle Financials. Suppose the company not implementing cash management. Okay. At that time, this is the accounting entry will generate. What entry? Directly it's the bank. Okay, the scenario changes. No cash management. The same payment entry, if it will change when the company implement a module called cash management. You have all the 5 finance module. You have cash management module also. Okay, what will happen? Instead of going to bank, that will go to bank clearing account. It's a temporary account, control account we call. Why? Because you are paying in check. Today, if I pay check 30th, it will not immediately converted into bank. Okay, it will take 3 days max. So until that 3 days or 4 days or 2 days, it will lie in bank clearing account. Okay. So you have to give one more account in the setup when doing a ledger. So what happened? So these are all in AP module. AP module. Okay. So what happens next? You are here directly at the bank. So what is the next entry here? After the check realizes, suppose today is 1st June. So 4th June. Okay.
Yeah.
Bank clearing account will be debited and bank will be credited. Okay. So now you see bank clearing account debit and credit will be knocked off. Okay. Same entry will come, supplier to bank. If it is a wire payment or online payment, directly it will hit the bank. It won't go through bank clearing. Suppose check and other things, it is the form. Okay. This entry, which module it is coming? So this, while it is coming in cash management or bank module. Why? Because while reconciling bank the payment, while you see from the bank payment is there, you reconcile. There is a reconcile option. Once you reconcile only, this entry generates. So you confirm that the amount has come to bank and you are reconciling the bank reconciliation also, 2 jobs. So after this, what happens? The next entry. Next entry, it will interface to GL. In the GL from AP payment, this entry will come. Okay. So this is the invoice and okay. It is a direct invoice and payment, right? And in AP module, you can see multiple type of invoice. I'll share our notes. You can understand the journal, right?
Yeah. Okay.
Okay. Any doubt you asked me very easily. So what is invoice recording based on purchase order? What I told purchase order is interfacing from purchasing module. Actually, purchasing module is in supply chain management, not finance. Supplier will provide goods and service. If it is a manufacturing like goods and service, it will come. You are running a service industry, no purchasing needed, directly a manual expense. Or any other legacy module also will be there. So it is record on invoice, PO, receipt of material. Okay. During approval process, delayed payment variance, invoice approval. There is approval process is there. And see accounting. There is a debit memo, credit memo. Okay. I'll show that in detail. These are all in generic application. So these are the setup. We can see in the session how to assign into the R12. We call it R12 ledger. In setup books, we call 11.8, the old version. And there is called each setup is there. Okay, how to set up an invoice supplier. We'll see in our practical session. How the information flows. So there is a first setup called in AP financial option, where you define all the everything. Then payable option, then supplier level, supplier header, supplier, each vendor level. The site level, invoice level, then only payment will be scheduled. So what is there under financial option? There are certain predefined and control option. Payable option in supplier level, supplier where there are values, invoice header level. You have to check whether which is needed or right. So the invoice transaction is divided into purchase invoice and see what are the type of invoice. Standard invoice. Now we see credit memo, debit memo, mixed invoice, PO default invoice, prepayment is the main one. Expense invoice, withholding tax invoice, interest. These are the type you can see. What are the type of payment? One manual payment, quick payment, refund payment. Suppose from AR, you are refunding to the customers. In AR, you cannot refund the customer, right? Once again, it has to come here only. Okay. That is called refund payment. That will be created automatically. These are the set.
What is the difference between manual payment, quick payment, and refund?
Manual payment, you directly enter. There is an option called quick payment. Why manual payment is used? Because suppose in auto, that is called automatic batch payment or everything. You use automatically a check number 12345, but it is void or you stop payment. System will not allow to do use one more time, right? Because it is already used. At that time, you use manual payment. Okay.
Yeah.
Quick payment is a normal manual payment you are doing. Suppose system missed the automatic checks, you can answer. It is a quick method. In detail, we'll see below. Okay. It is a summary. Okay.
Okay.
These are all the tabs which are in financial option. Accounting tab. Each tab having various accounts. You have to do the setup. Accounting, supplier entry, payable, encumbrance, tank, human resources. Why human resources involved in AP? Because you are paying employees, you are giving advance, you are deducting tour advance, that this and all. So everything that is linked. So these are this one more tab. So what are there under accounting tab? This never open, future open, close, permanent. These are all under. Okay. Permanently closed. What is permanently closed period? This one we'll see in GL. Okay. These are the setups we have given. RFQ only site, all unmatched invoices, this supplier entry, what is that? Each and everything slowly you have to read and understand. Okay. What is electronic payment? Check payment to a specific demand. What is that? A wire payment? I've given here. Okay. Pay alone.
Which topic we will discuss? General ledger or account payable?
Sorry.
Which topic we will discuss recently? General ledger or account payable?
General ledger full setup. He told general ledger theory is there. Now we are seeing all the overview of Oracle theory. Okay.
Okay, okay.
With accounting entry. How to understand with basic accounting. That is a my thing. Regarding to Oracle, it is easy. How we are comparing basic accounting, a +1 or +2 accounting with the Oracle methodology, so that you will understand. Okay.
Okay.
So this you can read it. These are all information related to each and every tab. So this is tax tab. See, while we taking AP practical, you will understand this better, right? Okay. Because your payable session not yet started in the practical, this is theory overview. Now I'll go to Excel and once again show clearly how accounting for the each and every one. Okay. Now you can see the Excel. So what we made, this is called standard invoice. Now I'll show you credit memo or debit memo. Credit or debit memo. Okay. So what happens? You can see the screen, right? Hello.
Yes, sir.
So what is the difference between debit and credit memo? The creditor, when he identifies and sends you, we call credit memo, and we realize it's called debit memo, and both are negative in AP. Okay. AR is opposite. Debit memo is positive and credit memo negative. Okay. So what happens? What is a credit memo? Nothing. It is a reversal of the invoice. See, debit, credit expense, debit sub. What do you mean by this? You raise an invoice, you are cancelling the business. Suppose it's a wrong order or you want to reverse it, credit memo is used. See, you are debiting supplier liability and crediting. So in Oracle, you created invoice with wrong, you cannot delete it. That's why you are using a reverse entry called credit memo. You can partially reverse it. Like you can give 900 or 100 will remain in the invoice like that. Okay. Now we are reversing completely. So credit memo and debit memo, or same. Okay. So we see in the entry of credit memo. So this format, if you read, you won't forget debit memo. So next important concept is what is prepayment? What is prepayment to understand? Prepayment or advance payment. You are advancing to the supplier. What is prepayment? In normal accounting, advance, prepayment or advance is a asset, correct? You are giving advance, it come in asset module. Prepayment is an asset. So I am giving advance to the supplier. Assets will come in debit side. Sorry. Prepayment liability. Okay. So I'm going to purchase an asset of 99,000. I am making 30,000 as an advance. So debit what comes in. So if you direct accounting, what will you do? Debit what comes in, credit what goes out. You will account bank to because you are paying an advance. But in Oracle, directly you can make a payment. You have to create an invoice and make a payment. Okay. So I am creating a prepayment invoice. First step. I am creating a prepayment invoice. First step, prepayment. It's a prepayment is an asset, prepayment advance to against you can take prepayment liability also. Prepayment liability. I am making an advance of 30,000. Okay. Same thing. Next, it comes the payment entry. Prepayment liability to bank. You understand up to this? Hello?
Hello, sir.
Understand, right?
Yes, sir.
Okay. You are making advance and you are taking payment for the advance. Now we go to like this. It's having cash management. So we will cover all the scenario. So step by step, prepayment liability is getting knocked off here. Okay. Bank clearing account will get knocked off here. Okay. So what you do first, you create a prepayment invoice. Second, you do AP payment. Third, in the cash clearing module, your payment received. Cash management module or bank module. So 2 AP module, once again, is clearing. So 3 payment steps, 3 accounting entry. It is coming into the bank. How much you are paying instead of 90,000? 30,000, 99,000. So what happened? Fourth step, you are going to buy a computer. Computer value is 99,000. Okay. You made an advance of 30,000 today of June. He said it will take 1 month. First July, make the remaining payment and collect the laptop. So these are all 1st June it is happening. Okay. Okay. So 1st July, what happens? You are going to buy the computer. So what entry you will make? You have to create an invoice. I am creating a normal invoice. How much value I will create here? 99,000 is the computer value. 30,000 advance be made. So how much value I will create? I will create the value of 99,000 because this is the invoice value. The 4th step. Okay. AP invoice. Okay. So what happened? I have to make the remaining payment. Now, before making the payment, I have to knock off the original payment already made. So how will I do? Already you have prepayment liability knocked off. Bank clearing account knocked off. Only you have prepayment left and bank. Okay. That prepayment in debit. Bring it to credit to get it knocked off. So if prepayment is credit, this both prepayment will get off. Okay. So what is the debit? Supplier liability will be the debit. So what happened at the amount of 30,000, your liability, we are, this prepayment also knocked off. What is remaining? Only bank 30,000. So what we are doing now, 5th step is completed. We are going to knock off. What is the 6th step? Supplier liability is 30,000 and prepay. Supplier liability, once again, there is a remaining of how much? 99,000 minus 30,000 advance. So I have to pay remaining of 69,000 now. So supplier liability to bank account or bank clearing account, I have to pay this amount. Okay. So bank, how much is the total now? 99,000. Okay. Bank 99,000 has come. Computer 99,000. Except this, all the entries should be knocked off. You see supplier liability 99,000, debit of supplier 30,000. Okay. Knocked off. Okay. Different color. Only you can see what is that. Computer and bank. This is our final entry. So if you make a normal entry, right? What will you make? Computer to bank 99,000. So that will comes having 6 steps. You are making your action clearly. This is the main interview question for prepayment. You have to explain. This prepayment liability knocked out, and clearing account if any, computer adjustment, finally supply liability to bank. Okay, clear? So credit or debit memo here. This is also prepayment. Okay. Hope you understood. Okay. Okay. If there are taxes there, oh, it is incorporated. How the VAT registration, how the recoverable or not recoverable tax, recession, everything in the notes. Okay. Business group once again they given how to attach this. So what is the payable option? We've seen the financial option. In payable option, what are all there? Accounting method, accounting transaction, payment accounting, currency, supplier, invoice, matching, interest, expense report, payment, invoice, tax, fault and rule. So this clear?
Yes, sir.
Okay. What is method of accounting? Fourth C, accrual method or cash method, only we know. There are many accrual methods also in various countries. So what is cash method of accounting? What is accrual? Do you differentiate? I'll tell you. Okay. Suppose this is today 30th of May. Tomorrow is 31st of May. I'll get the salary. Okay. My salary is 50,000. Okay. So the company is paying my salary to cash in. Company's books 50,000 to me. Deducting that this. Okay. Okay. So suppose in some office they are paying 2nd or 3rd of next month. But the salary expense pertains to this month, correct? May month. Okay. So what happens? They will create an entry salary to salary paid. That is called accrual. Better I'll explain here in Excel. Cash is direct. You understand the difference, right? That is a two method. Which method the client is following, we have to put it here. Okay. So this is all the process. How we will do. How the payment should be accounted. Payment accounting. How you want payment should be accounted. When the document is issued or when payment document occurs. See, what I'm telling is, document is issued. I'm giving a check to you today. Today date you have to account when document clears. Suppose today is Sunday, bank is not working. Tomorrow you will go to bank and remit, treat is Thursday. So if so, you have to tell the client which setup has to be made. Setup for document to date or document clear. Mostly you watch issued only because the user will not forget. Because if you follow clearing account, that is a better way. When the document is clear, that according to the client only we are configuring. Okay. Accounting gain or loss, it will be picked up from here. Cash basis account, everything. How to calculate gain or loss? What is currency gain or loss? Gain or loss means okay. Everything we'll see one by one. What all we have to see? We have to offset. We have to see the accrual entry. We have to see change rate entry. These are all pay group. How the pay is group, pay group. Support for the certain supplier, good supplier, we have to you will get good credit. Some supplier immediate, that all you have to create. Supplier tax, which is pay group and number one, we have to create. Like that, you have to create a pay group. GL date basis, important stuff. So invoice, which GL date it will base? It is defined on invoice date. Sorry.
Sir, the above option tick mark, what can show?
Tick menu in system you would see. When we're doing practical, you would see. Okay.
And they are not a compulsory to study.
Who is not comfortable?
No, so they are not. I don't understand the about correct the right tick more option.
No,
And
this
what
is
are
an
the
option, setup option based on the client. You have to tick. If the client is
Yeah.
not interested, you are not ticking. First, you have to understand theoretically what is that. Okay. Suppose the client I want the invoice date. Like I told today, you received invoice because the lorry and all come in Sundays, right? In the warehouse. Holidays only, road is vacant, correct? Godown wala warehouse, you receive the invoice. Today is the invoice date. But accounting department is on leave. You cannot, if you want invoice date, tomorrow you will write 30th May. What is the system date? System date is tomorrow will be 31st. So you want 30th May Sunday or 31st May Monday or goods received or invoice date. Goods record. When is goods recorded? Maybe you can say 1st June also goods recorded. Goods record or system. 2nd June. Maybe you are having class and that this. So this you have to explain to the organization where you are going to implement and ask them which date you want. Based on that, we have to configure. Understand? This will be detailedly explained in the AP module. Don't worry. Now we are giving the overview. Okay. It is an overview for understanding. We will go into detail. Matching process. Expense report. What is the expense report? There is a template. Expense to enter details of an employee. Expense of employee. You are going to tour. You are spending Air Force and everything. For it is in the form or template. Regular export code can be created, used as a default template. Okay, see, whenever you go for a tour or anything, they will give a form. They will give advance of 1 lakh. Hotel is 30,000. Food is 10,000. Okay, local cab conveyance this much, airfare. So you have to give the breakup, right? That is what. Okay. What is payment priority? Like I told, government taxes #1 priority. #2, salary to employees. You have to give the priority. So if you run automatic batch, it will pick up based on the priority and run and give it. Okay. What is automatically create employee as a supplier option? Okay. Employee is also a supplier to the organization. When you get advance, you get a prepayment, they have to record it, right? So that is called this option. This is all alternative. These are all not mandatory. If you want, you do it based on the setup. Okay. Payment. Single payment, batch payment. You have 2 payment. If you want to pay 1 by 1, that is called single payment. If you want to do it as a batch, that is called batch payment. Well, at a time you are scheduling, it will go. Okay. This is all print setup of the payment. So there is all the stack setups in the setup option. 1 by 1 we'll see while doing the setup. You can read the theory based on that. This one before that. Okay. What is line level tax and invoice level, gross level tax? Header level. Header level is the total of the invoice. Suppose the invoice is 1,000. Okay. What is line level? 1,000. I buy grocery for 1,000. I buy groceries for kitchen, this, that, and all. Line level break. I buy food item, that item, everything break up. So you want line level tax code or header level? Mostly tax code attached at header level. It is a gross tax. Suppose line level tax means some item is taxable. Food item, mostly rice is not taxable. This is taxable, that is taxable. So based on that, you fix it. That is called line amount tax. Okay. What is withholding tax is called like our TDS. They will hold some tax and pay the remaining. If your customer client having withholding tax, you have to tick it. If they don't have tax, you are not ticking. It is not applicable. Okay. These are the type of the withholding tax. So these are all the overview of AP. Now I show the accounting entries how we will show whatever we have seen. Okay. We seen standard the credit or debit memo prepayment. The expense report is nothing but the expense to the employee. It is like a standard, same thing. Okay, you can see the screen, right? Hello.
Yes, sir.
Okay, that's fun. What is the expense report I told? In total is 1,000 they given. Car expense, bus ticket, food, hotel. Right. Suppose you are going to Mumbai to Chennai, what all the expense? Local car expense, 10,000. You are going to office. Okay. Food.
Yeah.
All bills you are submitting. This is called expense report. Okay.
Sir, what do you mean by supplier liabilities?
Supplier liability is that is employee liability here. Here it is expense report. All the employee, how much you have to give back to the employer because you got advance of 50,000. Okay.
Yeah.
Now you understand?
Yeah.
So they given you advance of maybe they given you advance of 60,000. Your expense is only 50,000. So the remaining 10,000 you have to pay through the company. Employee liability. Suppose your name, ex-employee liability. So you have to give back to the company. So how you give back? How they receive? Ex-employee liability credit. Bank. So through your bank, you can transfer immediately. Or your salary, they will deduct. Okay. Your salary payable, this is in the company's account, not your account. Okay. So salary, your salary payable, they will credit and deduct and pay the remaining salary. So this is the expense amount. Okay. How the payment is made? Payment is single payment. Payment we already seen, no? Batch payment. Batch payment or we call payment manager. Okay. Single one-by-one payment. This is scheduled payment we call. It is scheduled payment. We can split payment and do. Okay. That is the batch payment we can see in the system. I told what is accrual or cash method, right? Accrual or is the difference. Suppose, like I said, cash directly doing it. Salary today, 31st May. To cash. If paid on 31st May. Same salary paid on 2nd June. Then you will not pay in cash, right? So you account salary payable, it is a liability. This salary is an expense. What happened here? 2nd June means you are getting the 2nd June you are getting cash. 31st May I will put in the liability account. See the difference in accounting accrual. This is expense, this is liability. What happened is 2nd June, I will pay salary payable in the credit bank here. So this is called accrual. I accrue the expense on 31st May because it will go to next month, right? Correct. I cannot put in the next month work. This is in the current month. This is called accrual method. So we want to client which method you want. Cash measure method means directly it will account. So in this type cash method of applied here, it will go to 2nd June. What will happen here? The expense of May will be accounted in June. It is wrong, right? Correct. The June expense will not go to May. That is a problem. That's why you have to choose correctly, explain them, correctly choose. Mostly it is accrual because it will be accrued, income and expense. Okay. Accrual or cash. Right. So this is the overall accounting of the AP. So with the tax, how it will come? Suppose there are two types of tax, recoverable tax and non-recoverable. Suppose I am buying a computer for home. $60,000. You are paying and getting. You are paying full for 60,000. Correct? Computer for a. This is not recoverable tax. You will pay some 10% added, included 10% tax. You are paying and getting it. Suppose what is recoverable? Computer for office. You are already registered for VAT. 60,000. 10% tax. So 54,000 plus 6,000 tax. If it is a recoverable, it will be accounted separately. So it's added. Now we are for home, it is computer account 60,000. For office, if you are having VAT, it will be computer rate is 54,000. Recoverable VAT. That is an account called recoverable VAT. Monthly you will pay to the government authority. VAT or GST. 6,000. Remaining supplier payable. So this is the difference of recoverable. Recoverable means you recover. Whenever you are paying recoverable VAT and you are paying to the government, you net off and then you pay the remaining amount. This is the difference of recoverable or not recoverable tax. Okay. Clear? There are many types of tax, withholding, everything we'll see once we do the practical session. Okay. You understood? We'll see accounts receivable theory. We are seeing only overview. Okay. Later part like the general ledger, we'll see slow and steadily. Okay.
Okay.
Okay. Now you got some overview. So it is based on customer, opposite to the supplier. It is a subsidiary. See, effective customer management module help on entrepreneur customer base. Sales invoice. receipt of money from customer. It's a subsidiary ledger. What is subsidiary ledger? GL is a main ledger. All the other modules are subsidiary. In that you can track customer transaction, receipt, and collection. Subsidiary to GL. Why it is called subsidiary? It is integrated with GL. Yes, it has to. All the accounting will be flowed to GL. Full audit with likewise drill down. From GL, you can drill down to any module. Okay. This is a flow. Customer sales with the credit limit invoice. After that, payment has come, collection activity. There is a concept called flex field, sales tax location flex field. In the class, we'll show where is the flex field. Territory flex field is there. Which territory the sales belongs to. AP no flex field. The same setup there. Here it's system flow. There it is. AP it is payable option and financial option. Here it's system option. Customer profile class. Credit limit. Payment term. Statement cycle. Invoicing. Discount information. Okay. Transaction level. How? System option from that to customer. Customer standard. Address. Business level. Transaction level. Up to the transaction level, how it is happening. So these are the tab in the system option. So each tab we have explained. Accounting tab, how it is there, how the account is given, realized gain or loss. Whenever there is a sale, that will be picked up. These are the setup. When we do setup, you can follow this slowly. Okay. What is cross currency rate type? Cross currency rate type. Suppose I am invoicing in INR. I am buying 1 lakh worth of goods from Q. But I am paying in USD. That is called cross currency. Okay. I am paying worth of 1 lakh worth of USD today. Today is Sunday. Okay. So I am buying you 1,200 worth of USD currency, which is equivalent to 1 lakh today. What happened tomorrow? The currency fluctuates. It reduces instead of 78 rupees, USD becomes 73. So 5 into 1,200, it may be a loss or profit to you. That where cross currency will affect the gain or loss. Okay. So tax, you can see. Sell tax. Error, all this. Very easily we given the notes. If you go through one time, okay, you will understand very clearly what is this, comparing to your screenshots of the system. Printer transaction, if you want to do this, that. So invoice. Auto invoice setup, if you do, automatically it will interface from sales order module. Order management, there is a module. You will be interfacing it. Line and tax, invoice. Okay. Auto cash. Suppose from interfacing PO, like interfacing PO to AP, auto cash rule set, if they define, it will interface from the sales order module to the AR module. That's what they have given. These are all technical team will help to set up. Okay. But we should know what will come there. Always we have to finance can worry about the accounting entry, how it will generate, how will affect the finance. Okay. Credit profile. Suppose the customer is coming. How you validate the customer? There should be a credit profile for them. There should be a profile class. There may be good customer. To identify based on the market and a good customer, you give 3-month credit period. There may be average customer. I am giving 30 days or 60 days. There are 45 days. Poor customer. What is poor customer? You don't know whether money will come or not. So you make immediate receipt of payment, 0 days credit. Or some poor customer, you give 15 days credit. So you understand that the customer will not repay money. Then why you are having a poor customer? Okay. See, suppose there are some goods, some byproducts nobody will buy. Suppose there is a soap company, some waste product, you have to throw out waste only. But some customer want to buy and give you a price. So that is used for you. So that scenario, you will have some poor customer. So the big saloons, the hairs will be cleaned and throw away, right? You have to put a permanent person for cleaning. But some vitamin companies, they will pick on their own. So you give that free, right? That are all poor. If they give some amount also like that, these are all clearly stated. You see as per the tab how it is worked. Okay. These are the type: invoice, debit memo, chargeback, credit memo, commitment, deposit. These are the types we will see in the AR accounting. Okay. These are all how the invoice is there, just clearly stated. In AP, we call invoices. In AR, we call transaction. Okay. Just to differentiate, both are invoice only. Transaction in AR, we call means you simply know that this is a AR. What is the source is imported or manual? Then all are same only. We have ship to bill to in AR. Shipping location, billing location. Okay. These are all we'll see how it is going. Commitment deposit, I'll tell you the difference. What is commitment? What is deposit? These are very important one. Commitment and guarantee. Consolidated billing invoice, the report. What is transaction? See, everywhere there is a batch and one night. Payment batch and single payment. There is a bulk of transaction is called transaction batch. Single transaction is called a transaction. Okay. Invoice with accounting rule. This also we'll see. These are the setups for that.
Sir, you are scrolling this part is not a compulsory.
It is compulsory. Session? We will take, and at that module when we take, we'll take in detail. Okay.
Oh.
We'll show that. Now I am telling you overall theory, comparing to accounting. Okay. What in AR? What are the type of invoice? How is the accounting compared to the basic +1 book or something? Basic accounting. I will understand. Okay. These are the Oracle setups. Like general ledger step by step, how you read, you will see in AR, right? Understand?
Yeah.
Yeah. Okay. Now I don't want to confuse you. I want to do the overview to understand only.
Oh, okay.
Right. This will be taken in detail. Don't worry. Okay. Just now I am telling what is there covered theoretically. Easier to know the module overview. So if you read, you can understand based on with the Oracle. These are all Oracle screens. Receipt. Receipt, what is there? What is the type? We'll see. AR is very good. It is having more things to learn. What is adjustment? Receipt reversal. What is receipt means? You are receiving money from customer. What is receipt reversal? You receive a check, it is getting bounced. You would reverse, right? That is called receipt reversal. Okay. These are all set up. While we take it is becoming easy. That's why I given in steps side by side you can see. Creation of bank account. Very step-by-step notes. While you see the Oracle screen, side by side, if you can see, this becomes very easier, okay? Okay. Fixed asset we'll see in the next class. Now I'll show you the accounting entries of AR. Okay. Next. Understand?
Yeah.
Okay. I'll share that screen.